This is an updated technical analysis blueprint plan of action of the 0 TDE strategy on Spider, the largest component to the S&P 500, the day trading game plan for them all, March 3rd, 2023. And my previous video I'd mentioned a day before the open of the March Madness, February 2023. Trading spot price 396.26. We had that 236 fibs retracement coinciding with the 396.34 dual gap support. We had that 395.18 price support, the 393.68 price support, and then ultimately this 392.56 price support, which would really need to be held once taking out the 0 fibs retracement. And here we were, right at the cash open. We actually opened up right on my 395.18 price support there. Ended up bidding up, provided a great risk 4-to-1 risk reward ratio, up for darn near 0.4% with a 0.1% stop loss. Completely got rejected at that resistance level, melted right through that 395.18 price support. Had a nice steep counter trend rally right back into my 396.34 price resistance, offering an additional objective short trade entry for a great 7-to-1 risk reward ratio. Completely recovered right back above my 393.68 price support, offering an objective quick day scalp long trade entry for 0.7 of a 7-to-1 risk reward ratio. Ended up knocking right back into 396.34 price, my price resistance, rejected once again, and to the button right there, right back to 393.68 for another 0.7, a 7-to-1 risk reward ratio. Right back up to resistance for another 4-to-1 risk reward ratio, right back into 395.18 price resistance, and got rejected impulsively right off the close there. Ended up closing very next day. We opened it up today right at that 392.56 price support, and to the button here off a great 1/10, call it a 15.7-to-1 risk reward ratio. And we had a Fed member come out talking about pausing rates midsummer, and this thing just completely consolidated, kind of danced amongst my 393.68 price support and never looked back. Completely gapped up, tested this 396.34 price support once again, and just took off there. Nice clean 15.7-to-1 risk reward ratio. And I had mentioned, like I've always mentioned in my previous videos, the longer you hold on to the trade, the more in gains you're going to make. And a one single day trade right off the open, just ripped it. That thing ripped for a great 10x, call it 15, 20x, depending on some of these strikes that you set off. Just amazing. Even bigger, definitely, especially if you took some calls right at the open for a 398 strike price. Would have paid just insane 10x, 20x's, you name it. Just a ton of possibilities and configurations you could sort of hone in on some of the strike prices. But again, just provided a great 15.7-to-1 risk reward ratio. Call it a 16-to-1, darn near 16-to-1 risk reward ratio. Congrats to anybody who caught it. And here we are. We got these new key levels that I'm starting to come out here. And right here, zoomed in on the 5-minute interval, we have this new primary hidden trend line off the reactionary lows of February. Reactionary highs, reactionary lows to help validate that, coinciding with the 618 fibs retracement, a 398.57 price resistance. I'd really like to see the 382 fibs 396.17 price support hold, coinciding with the bottom of the gap there. That's going to be a pretty big level, I think, tomorrow, in my opinion. If we snap that, then the 50 and 200 5-minute golden crossover will completely come to a screeching halt. And again, I think some pretty sizable damage could take place there on a reconnection right back to 236 fibs retracement at that 394.74 price support. And if we start melting down there, I would only suspect bull traders, dip buyers need to hold that 393.66 price resistance and the 392.56 price support once again. It would be a pretty quick move to the downside if again we take that key level out. As far as the long traders, the dip buyers, bulls want to see a complete breakout of that 618 618 pips price resistance coincided with the primary downtrend line. Call it a dual line of support to make that March next leg up higher.